8/29, 2020. What do I have? S&P closing out at 3507.81 on the weekly chart. One of the most amazing overbought rallies we've ever seen. And the old thing is that it is that overbought now, 99.77. We've made a series of new highs. We've hit up targets. We're overstretched, and we are. And the dog days of August, the month of August, is about to end. So as we understand markets extremely well, we also understand negative divergence. And we also understand that it was the Tesla, it was the Apple, it was some of the rotating areas, but it's only a handful of stocks in the S&P 500. So when you're pushing and making overbought 99.7, it did hit 100 on Friday, and that is on that percent K. And that fast stochastic on the weekly's hitting right up there at 98.9, and that CCI is hitting right up here at 155. And the slow stochastic is very alarming at 98.8. So we have, once again, an extraordinarily overbought S&P 500 rally. Month of September, the election is coming. The volatility is going to return. And we're going to go into the month of September. And Monday, we're going to go out with a bang, obviously, in an overbought market. And it's not the only one. And I'm also happy to point out very clearly to you, one of the things that I would like to point out is that 75% of the stocks in the S&P 500 are above the 5-day moving average. One of the other things, 20-day simple moving average, 70% of the stocks are above it. 50-day moving average, 81.62% above the 50-day. The 100-day, 75.69%. The 150-day moving average, 82.21% of the stocks are above that 150-day moving average. Now, what does it mean? Well, here, let me give you an example. On the 150-day moving average, I'm going to pull up a chart. And the chart that I'm going to show you is right here in the video. And this is the chart where we're hitting the high. Where everybody, this is a 150-day moving average percent level above it. And you can see it's at its highs. It started to dip. They came back. But one thing that we do know for sure beyond a reasonable doubt, and I can tell you what that is that the higher that these numbers are above those key moving averages that I just discussed is very alarming, because all it really is telling us is that the majority of the people in the bull run cycle that we have here are in the market. Okay, that's number one. Number two, we've had a lot of outflows, and people don't realize that part of it. So when we take a look at what these percent level of above key moving averages, 150 days, 82.21%, just so people know. And then on the other ones that I talked about that are above those moving averages, and then the top performing stocks. So the 50-day moving average is 81.62%, which is an extremely high number. Now on the 200-day moving average, which is a high number, is 62.05%. So let me just say what happens when you get overstretched in a bull market, and I've said this many times. And this particular one with the algos and the high frequency trading technologies that are used in the futures market, which drove this S&P 500 up the highest level, you had a handful of stocks in the S&P to make these all-time highs and whatnot. So when we get a rotation out of big heavy tech that ran this up higher and got it this overbought, and when the sellers appear, then what's going to happen is they go down very quickly. And that correction is very long overdue. And going into the month of September, well, they outdid it and did great. You got 99.33% overbought on the daily. That's the daily. Oh, and just let me point one thing out. Why, looking at it, that MACD is now positive 6.8 from the way that they ran that up there now. So on the monthly chart, which we're going to look at, that on a monthly is 99. It tells you right there. It says stochastic, 99.907 overbought. CCI on a monthly, 191.3. Fast, stochastic, 88.44, and a slow on a 78. And that's on a monthly. I'm showing it here now. And we're at the top. And we broke through in this bull run. And it's been an extraordinary bull run. And it has. And the Fed, there's lots of stuff. But volatility does happen. And when it does, then we're going to see how people react when they're this overbought. So we're given another warning on the S&P 500 at these current levels. I'll go 99.9% K overbought. The weekly chart, once again, we went out at 99.77. And the CCI, we went out at 155.0. And we did. And basically, the RSI up there, that's at 75.38 right now, and whatnot. So that is a very high level. So we're watching all of these things, and the monthly change, and people looking more into the fall and winter and what the election and the volatility that's going to bring. And this is why we're given the warning. And the stock splits and the announcements and one thing after another with the Federal Reserve, which has been the culprit behind the whole rally. Had it not been for them, there wouldn't be any big rally. And we've entered in to overbought zones. I've been around 35 years. This particular one, as an expert in the technologies that are used in the exchange model, ECN model, the futures markets, the various different things that can be done. But the problem is this. There is only a handful that have got us to this overbought weekly level. And when they decide to sell them, then it's coming down. And the cautionary, the month of September, they had the best month of August since year what? 1984. Yeah, 1984, 1986. You have to go back that far. And, it's really amazing the fact that fundamentally nothing's changed. And it hasn't. And Wall Street and overbought S&P 500 and Main Street are two different mechanisms. And everything the Federal Reserve does never does make it to Main Street. Never has, never will. And so I don't see where using the wanting to get the inflation higher. Oh yeah, Why do they want the inflation to go higher, the Fed? Because it makes their debt cheaper. That's why. There's a lot of different things going on in there that don't add up, and I can tell you there are many of them and whatnot. When we see a S&P 500 this overbought, which we very rarely see, and we've seen it on a number of occasions, is that we would like to see more than 7 or 8 stocks being the culprit behind it. We would love to see where the S&P overbought was, 400 stocks. And, we don't see that. So beware moving forward and be very cautious. The month of September, election, volatility is here to stay moving forward on the S&P. And I'm giving this bulletin to all of our traders worldwide.